First of all, let's talk about yields going forward. 2011, obviously, the story of 2011 will be of rising yields as a result of the tightening we saw at the central bank to defend the naira and, of course, to rein in inflation. What are your thoughts on the future for yields going forward into 2012?
Well, thank you, Wole. 2012, I mean, has already started on the same note as 2011 ended, particularly on the short term. Short-term T-bill rates are actually still going up. We are seeing 364 treasury bills at the Omo auction this week at 17.2. One of the 2 days around 17. So those are very, very high rates, and it's difficult to see those rates coming down if inflation indeed spikes because of this oil situation. Central bank was predicting inflation of 15%.
Yeah, that's a point I want to get your thoughts on. Can we see yields realistically go higher? I mean, at some point, I think they really have to really just stabilize, because we're already seeing 1-year yield at 16%. And even though if we do see inflation rising as most people are expecting, can we see them possibly at 19%?
Well, I mean, everything is really a function of demand and supply of money. I mean, in this country, we've seen yields over 20% before for CB. So it's not something impossible. However, in 2010, you had negative real interest rates with single-digit bond yields and double-digit inflation. So, I mean, things in Nigeria are not necessarily always that interest rates have to be positive. But given the current situation, it's hard to see a dramatic reduction in those yields on the short term.
Right. Let's review the issuance market in 2011, and then we'll talk about what to expect in 2012. We saw much less issuance from the states and also even from corporates. What does that reflect for you? Obviously, we know that there was higher interest rates, and obviously that makes the bond market a bit less attractive to issuers. But what other factors were at play in your view?
Well, I think, 2011 started off looking good, but I think part of the challenge for 2011, if we separate between state and corporate. On the state side, when the Pension Commission came up with new rules that governed how which state bonds pension funds could buy, it kind of created a bit of a delay in bond issues in 2011. Overall, yes, we only had 5 issues for 92 billion compared to 4 issues for 92 billion compared to 5 issues raising 157 in 2010. The big difference in both years was the fact that the mega states, the Lagos and the oil-producing states, are the ones that do the 50 billion plus issues, and only one of them issued in 2011. The other big thing was towards the end of the year, the hike in interest rates made it almost impossible for states to issue bonds.
All right, so
on the corporate side, sorry?
Yeah, go ahead.
Yeah, on the corporate side, it's very simple what's happening. The short-term yields are so high, the risk-free rate is so high that it's becoming almost impossible for a corporate to price a bond. And banks are still lending below the risk-free rate to high-quality corporates. So all of a sudden, the bond market is no more the cheapest option for those corporates. Now, having said that, for 2012, we don't know how long the situation will persist. It is an anomaly, and hopefully, later part of the year, we will see a reversion to the norm where the yield curve is no more inverted and where people start to pay actually commercial rates for borrowing. At that point, it becomes a lot more attractive for corporates to issue.
But which deals
right now?
Well, I was going to ask, which deals are on the table for 2012? Like you mentioned, we've already seen the likes of Lagos and Rivers, the big states, like you mentioned earlier, already issuing bonds. What's the prospect that would see even others issue bonds this year?
Well, right now, there are at least 6 state bond transactions that are in various stages of execution. And there are probably another 4 or so that are about to start. So the question really becomes which of them close in 2012. Given the fact that many of them are from the third quarter of 2011, I would expect at least 200 billion worth to close this year. The problem becomes how they are priced, because right now the last DMO auction priced a 7-year bond at 15.93. Most of these state bonds are all 7 years. I don't see any state bond paying 16.93 plus a premium. They just simply cannot afford it. And so it becomes a function of negotiated price for those bonds.
What are you hearing about infrastructure bonds? I'm hearing that that's something that's also on the table for 2012.
Well, I mean, Most of these kind of bonds have been on the table for a while. The challenge in Nigeria is heavily driven by having high quality underlying assets. So as far as we know, there are not very many privately owned quality underlying infrastructure assets. When those assets become available, there will be bond issues against them. But the assets have to first be available before you can issue a bond. You can't issue a bond in anticipation of the assets becoming available.
All right, Egie, let's leave it there today. Thanks so much for your time.